Hi, Dr. Dolly. I've been meeting with an independent financial advisor. First, I just want to say thank you for everything you do for us. And he was talking to me about a couple of the larger life insurance companies and this recent tax code change. I believe it's tax code 7702 that allows the cash value to grow on a much faster rate than it previously was otherwise. I know you've got some pretty negative thoughts around the whole life insurance, but some of the companies sounded like they pay a very nice dividend and have historical good returns. So as an alternative to bonds, I thought this might be a good idea, particularly ones that are paid up in 10 years and require no more premiums. The cash value is growing at a fairly nice rate of return. So I didn't know if you had any new thoughts on this based on the tax code or what your opinion was. Thank you. Again, I appreciate everything you do.
Okay. 7702. I kind of hate 7702 because, these guys that sell whole life insurance, they use things like these tax code numbers to sell whole life insurance, right? Instead of saying, hey, this is whole life insurance, they say, here's a 7702 retirement plan. It's brand new from the government and makes you think that you're dealing with a 401k or something. It's not the same thing. Okay, this is just like a section of the tax code that talks about life insurance. It's not some new retirement plan by any means. All right. So there is a post out that was probably published since you recorded this question on the SpeakPipe. It came out on June 11th on the White Coat Investor blog. It says why you shouldn't buy a TFRA or 7702 plan. And, there was a guy out there selling these things and he was selling them hard. And I wrote this post, just ripping them up one side and down the other. And my team said I had to neuter it. I could not run it in the form I had written it. It was entirely too personal. We were going to end up having legal problems with it, et cetera, et cetera. And it was just downright mean. So I neutered it back, but left in enough that you can learn exactly what I think about someone selling whole life insurance using a name like a 7702 plan. I don't like it, is the bottom line. What were the recent changes to Section 7702? Basically, it lets you pay more premium for less permanent death benefit. So a little bit more of the premium paid goes toward the cash value. That's it. That's the change. Okay. Do you still have to buy a permanent death benefit? Yes. Does it still go through all these fees and commissions that the insurance company makes you pay? Yes. Is it a great idea as an investment? No, it still isn't. Okay. And then they'll tell you, oh, we don't sell them as investments. We sell them as life insurance. It's not an investment, it's insurance. Well, whatever. You're trying to sell it to us to use our dollars for instead of putting them into a real investment. So here's the bottom line, right? If you are skipping out on a retirement account in order to put money into a whole life insurance policy, that's almost surely a mistake. If you are skipping out on an investment that likely has higher investment returns, we're talking stocks, real estate, and instead putting that money into whole life insurance, that's almost surely a mistake. You are far more likely to grow your wealth faster in a riskier, but maybe less risky over the long run investment like stocks or real estate than you are in whole life insurance. If you look at the policies being sold today, and you hold these policies from the time you're 30 or 35 until you die, over 50 years, your guaranteed return on that is about 2% a year. That's the guarantee. And that's if you hold it the whole time, right? You sell this thing in 5 years, you're probably selling it at a loss. The projected return will be up around 5%. That's the return they'll put in the illustration that they're projecting. What'll you'll actually get? You'll probably get something in the 3 to 4% range. That's what I would expect holding a whole life insurance policy in the long run. I don't think this change on 7702 significantly changes that. So I would expect about the same thing in the long run. Now, if you sit back and think, well, what about investing in bonds in a taxable account? This might compare favorably to that. Well, okay, it might. There are some downsides, though. For example, if I invest in bonds and I want my money in a year or 5 years or 10 years, I'm almost surely coming out ahead with the bonds than I am with whole life insurance because it's going to take 5 to 15 years to break even with whole life insurance. Now, you don't get a death benefit like you do with whole life insurance, but you can buy that pretty cheaply with term life insurance, at least for your working years. So I don't think this changes the calculus of whether you ought to buy a whole life insurance policy. Don't own one anymore. I got rid of the crummy one I had sold to me as a medical student, which is basically malpractice, financial malpractice, if you will. And I really don't think you ought to buy one. But if you understand how it works, you really have a clear understanding of what you're going to get out of this policy, and you still want it, go buy it. Knock yourself out. I don't care. I don't get more money or something if you don't buy a policy. I don't get more money if you do buy a policy. But what I'm sick of is running into docs who got suckered into buying one when they had a better use for their money, like maxing out their retirement accounts, like paying off their student loans, right? I mean, you get in this investment that maybe you make 3 or 4% in the long run while you're running around with 6% student loans. It doesn't make any sense, right? I'm sick of that. And if you look at the statistics, if you look at statistics from the Society of Actuaries, about 75% of these policies, 75 to 80% of these policies are surrendered prior to death. So 4 out of 5 people that are buying them are regretting it. You ought to really understand the reason why they're regretting it before you buy one. And when we've surveyed white coat investors who have actually bought a whole life insurance policy, 75% of them regret it. So take from that what you will. Hope that's helpful. If you want your questions answered by the White Coat Investor, record your question at whitecoatinvestor.com/YQA or click the link in the description.
The hosts of the White Coat Investor podcast are not licensed accountants, attorneys, or financial advisors. This podcast is free entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.